Interest rates, inflation, the market slowing down, the collapse is coming, right? Welcome back to another real estate market update. I'm Uros Markovic. I'm Calgary area realtor and I'm going to be your host today. In this update, I'm going to share with you the most important things you need to know about the housing results from May 2022 just released by our real estate boards. Also, I will give a comment on what impact raising interest rates will have on our market. We find ourselves nearing the halfway mark of the year, and year to date has been nothing short of a wild ride. We started this year with a bang, completely demolishing 2021's January by whopping 66%. Then in February and March, we experienced record-breaking sale figures for that time of the year. It felt like 2005 to 2007 boom days around here, if not even better. Then in April, despite pullback in total sales, things continue to sell well beyond prior bests. And the funny thing is that the media, success haters and naysayers were saying that slowdown was in effect. Watch out, brace for an impact because the collapse is just around the corner. And that brings us to May. Okay, so I'm here to admit that I was too optimistic. Sales did once again fell. They were right. The headlines predictions were true. It's time to panic. Or maybe not. Maybe, just maybe, Alberta and specifically the greater Calgary area is writing its own story. Let me unpack this and share with you the details of our unique story so you can rest easy and leave this update with the confidence about local real estate market. I will start with the sales summary. Yes, we did see sales slip from April, which again was a slip from March. But that's not all. As I said before, of course they did. There was no way that the sales pace could continue to surpass historically averages by huge margins every single month. Of course, months like that are going to be a temporary thing. Digging deeper, you will see that we recorded 3,071 sales for 1 month. That is 100 sales per day. And guess what? That makes this the best May of all times. Once again, we have set all-time record for a given month. Here we are breaking new records and doing so in a year which we have already had huge gains. So did sales slow down somewhat comparison to a few recent months? Sure, but it is almost irrelevant. And when looking year to date on this chart, you will see how far we sit above and beyond recent years. Let's talk about the inventory now. First of all, many people focus heaviest on the total sales numbers to gauge the market, and I think that is a huge mistake. It is a part of the story, but not the most important part. This is where inventory comes in. A couple of things are happening here that I wanted to talk about. First is new listings to market. So while sales eased over the last month, so did new listings to market. During the busy spring season, you typically see more and more inventory get flooded into the market. This simply isn't happening right now. For second month straight, we have seen fewer new properties come to market in comparison to the last year. Yes, we listed more in May than in April, as we should and always do, but it is a drop-off from the year before. Why does this matter? Well, the concern is that if the sales numbers start to slow as inventory climbs, it will disrupt the supply and demand equation and apply negative pressure on our pricing, and the prices will fall. But again, we are writing a different story here. We are not seeing surplus inventory coming to market. We are seeing less than seasonal gains, driving us right into my second point: active listing inventory. Currently, we are sitting on 15-year low inventory for this time of the year, and that is the opposite end of the worry spectrum. Again, why does this matter? Well, if the inventory on the market remains near record lows, those who may be concerned about housing values staying steady should know that we have a great deal of buffer room if sales do slow down far enough. But remember, I just finished saying that the last month was the best selling May of all times. So you don't have to be a rocket scientist to understand how we are writing a different story here than in the rest of the country. Alright, so let's transition to third point of our market update triangle. Let's talk about the pricing. And what does this all mean in terms of our housing values? Well, year over year, our pricing gains remains nice and strong with 14.5% growth overall. And this is how it looks for all four property types. Detached are up 16.6%, semi-detached are up 14.6%, row homes were up 16.7%, and apartments were up 8.9%. So very strong across the board and strong across all areas both in and around the city. This is also a month-over-month price gain of about $1,700. All of this happening despite the market slowing down and the sky is falling messaging that is out there. Yes, the month-over-month growth has slowed down, but again, of course it has. There was no way that we're going to see such a huge bumps in a value as we saw in January, February and March. People talk about the average sales price and the median sales price adjustments as declining since February and March, but that simply does not matter as much as the benchmark. The benchmark is the true metric of the market for us to use and provide the most accurate measure of the specific market activity. Sales in the apartments and row home markets soared in May, and those markets are more affordable. So, as you record more sales in the cheaper parts of the market, it will obviously change the average home price accordingly. So again, this is why the benchmark provides the truest indication of what is really happening. Alright, so we reviewed pricing, sales, inventory. So let me give you my summary to what all this even mean. Let me bring this all together for you. You might be saying, yeah, that all sounds great, but aren't the government interest rate hikes and inflation going to continue to hurt us? Well, first of all, there is no hiding from the mess the government has gotten us into. Nobody is going to be sheltered from economic strains that will cause to each and every single Canadian household. But there needs to be some intelligent discussion around it, and specifically our local situation. First of all, here in Alberta, we sit on the top of the Canadian average salary chart. This means that we simply have the most money per household. Second, as I've mentioned many times, take a look at the chart below to see how nicely our housing prices sit among our Canadian peers, who I just mentioned make less on average than us. Not only did our year-over-year numbers grow, but one of the lowest percentages in Canada, but we continue to be far lower than Canada's big employment centers. And then, further to that, our recent price growth is the only price growth we have had since 2014. That certainly hasn't been the case anywhere else in the country. And no, just because we didn't grow doesn't mean we're not going to be affected. It is more than that. It is because we didn't grow and everyone else continues to get worse off in terms of their housing affordability. In tough times, people will gravitate to where they can afford to live and really raise their family. And right now, that is here. Remember, we have some of the cheapest real estate for the major urban centers, and we earn the most. A study released just a few weeks ago found that Calgary is the 10th in the world in the terms of affordability. That is something to hold the confidence in, and something that does not change overnight. And the last thing for today I wanted to talk about is discussing the interest rates. And take a look at this graph and look at the far right. What do you see there? This is where we are at after the last two interest rate increases. And there is some continued messaging that we are going to get bumped up again this year. So looking at this graph, do you think that taking into account first 2 points, we can weather a bit of a storm when it comes to those interest rate hikes and those yet to come? The answer here locally, where we earn the most in Canada and one of the most affordable places on the planet, is yes. I'm in real estate. I earn my living as a realtor. And yes, I do better when more people are excited about buying and selling the real estate. But nowhere in my discussion today, nor in any of my market updates to date, did my reporting on things coming from a place of greed or a airy-fairy commentary. This stuff is a fact. a cold, hard microeconomic fact that gives me a great deal of confidence in greater Calgary real estate market. And this is all for this month. Thank you for staying with me. And if you need any market information relating to your specific situation, please don't hesitate to let me know. I'll be happy to help.